This
This one.
conference will now be recorded.
So typically I record the lectures and then I put them in YouTube uh, on the J-Board Accounting. So you're able to go back and look at everything we said. So y'all have to remind me to always record once we get going. And that way, if you got any question, you can always go back and look at what was said. So just go to J-Board Accounting on the YouTube and you'll see lectures from the past and these summer lectures. Okay. Now, to really understand accounting, you got to be focused on, you got to move from always going out and buying something. I'm going to run a business and make some money. So a lot of time our focus is I'm going to work and get a salary and buy stuff. Well, you got to change your thought process to the fact that you're going to run a business and make some money. Okay. So what I want you all to do is to assume that you're going to run a rental car business. You're going to have a business that rent cars out to people. I want you to give me a name for your rental car company. I want you to get some articles of incorporation, an organizational chart, and I want you to create a stock certificate to issue. So this is just thing that you've got to do by the end of the week. So I want a name for your rental car company. I want your articles of incorporation, your organizational chart. And then I want you to prepare a stock certificate which reflects the fact that you started this company and you own stock in it. Typically, we're gonna have the corporate format. So when you run a business and you put the money in your business, that's separate. So the business has your money and you have a stock certificate saying I started the business. So you got to have all of this ready for me when you're turning in your journal entries. But your focus is on operating a rental car company. How can I make money? And so once again, a business creates a system so it can prepare a financial statement. We got all these statements, everything that your business is doing. But the only thing people see from your business is the income statement, retained earnings, balance sheet, statement of cash flow. They just see these statements. So, the private things you're doing, they don't see, but you summarize it in these statements. Okay, for accounting, there's an accounting equation which that's the foundation of everything we do. Assets equal liabilities plus stockholders' equity. Stockholders' equity consists of common stock and retained earnings. Retained earnings is revenues minus expenses minus dividends. So this is the fundamental accounting equation. So you need to be familiar with this, because this is supporting everything that we're doing. This equation, assets equals liabilities. So this first line, asset equals liabilities plus stockholders' equity. And then we derive it some more. Stockholders' equity consists of common stock and retained earnings. Then the retained earnings consist of revenues, expenses, and dividends. So you want to make sure you're familiar with this equation. And as we work with this equation, there's one key asset, cash. So when you start a business, you put cash in it, and this equation is always equal. So that stock certificate has your $100,000 on it, and that represents your interest in the company. So the company has its bank account as all the other separate from you, and the purpose of a company always is to increase its cash and through earnings, not through borrowing money. So this is why you form a company. You want the cash to go up through earnings. So just always keep that in mind. Long time ago in the 1400s, Pacioli developed the double entry system of accounting. And basically he said this: whenever you engage in a transaction, and two business people engage in a transaction, you receive something to credit and you give up something. So what you receive is the debit, what you give up is the credit. So if you go to the grocery store and buy some groceries, the debit will be the food you bought. The credit will be the cash you gave up, or the credit you created with a credit card. So debits are always on the left and credits are always on the right. So when we work with accounts, debits always on the left, credits on the right. Debits represent what we receive. Credits represent what we gave up. So this is the double entry accounting system that's following upon this equation is how we operate our accounting process. Okay. So what the double entry system is saying is that, there's always going to be two accounts involved whenever something is happening. Two things are happening. And so as we look at this equation, assets typically have debit balances, liabilities credits, common stocks credit, return earnings credits, revenues credits, expenses and dividends, they're on a minus sign, so they have debits. So we'll come back to this, but we're translating that equation into debits and credits since it's always two things that's happening. It's always two things happening as we operate an account. So we'll come back and we'll, of course, review this next time, but just giving you boilerplate information that you should be familiar with. So why do we use debits and credits? Suppose you had this situation here in your business. You started off with 50,000, paid out 10, you paid out 15, paid out 3, you got 15 in, you paid out 4, you paid out 2, you got 2 in, then you paid out 8. How much money do you have? So after all these transactions, how much money do you have? Can anybody tell me how much money they got?
I got 37,000.
How much?
37,000.
37,000?
Mhm.
So I'll take your word for it. Now, what we actually do in accounting is got a different balance than you did. Every time the account went up, we had a debit, 50, 15, and 2. Every time it went down, it was a credit, 10, 15, 4, 2, and 8. So what we do, we add up the debits, we add up the credits, and take the difference. And so this says it's 25,000. So is it 37 or 25?
Oh, I didn't see the rest of it. I only saw up to the line where it says 4,000.
Gotcha. Okay. So this is a reason that we use debits and credits. We can add up the debits, we can add up the credits. You can just go plussing and minusing, but that's hard to work with. So we just add up the debits, the credits, and we take the difference to get how much is in the account. Now, a double entry system of accounting is going to reflect two things: what we got in value, what we received in value. Suppose you bought a car for $10,000. What did you get in value? The car, 10,000. What did you give up? Cash of 10,000. So you see how two things happen. You got a car, but you gave up cash to get it. So the car is debited, the cash is credited. Now suppose you bought the car with a note. Same thing. You got a car, something of value 10,000, but you gave up a note. So those are two different things. So we got to reflect which one occurred. Did you pay cash for it? Or did you borrow money to do it? And then you can have a situation where you pay an amount down and sign a note for the balance. So it's still a car of 10,000. That's what you got in value. But you gave up the credit, cash of 2,000, and then you signed a note for 8,000. So now, once again, you see the reason for the double entry system. You're getting something of value, but what did you give up? So when you're running a business, you got to say what you got, then you got to say what you gave up. So this is some basics in terms of the fundamentals of accounting. Are there any questions on anything we've said so far? Are there any questions by anyone?
I'm sorry if I missed it, but where can we find the primer?
In the bookstore, hopefully. And it needs to look like this. If not, I will put an announcement. Somebody at the company you can check with to get this, our rep. But it should be in the bookstore. Okay. So let's do a little bit more, then we'll take a break. We're ready for the accounting cycle. So remember, I told you you're gonna be able, you're gonna be preparing financial statements, but we got these steps that we're gonna go through. And this first week, we mainly working on step 1 and 2, analyzing transactions and making journal entry. That's all we're doing. Analyzing transactions and making journal entries. Can't get 3 or 4 if you can't do 1 and 2. So what I do is I spend this whole week like we are just on making journal entries so you can make journal entries. Then once you can make journal entries, you're in good shape. How do we make journal entries? You got to record every financial transaction. Each journal entry requires an equal debit and credit amount. So every time you make a journal entry, you got to have a debit, you got to have a credit. You're going to read the transaction and determine what type of journal entry it is. And we'll come back to this later. But there are 20 journal entry types. Now, first of all, this is our chart of accounts. You don't create any more accounts when you don't create any more accounts for me. I already got the accounts I want you to use. I did jump all the way there. Jumped all the way on me. Get back to where we Okay. These are the accounts we use. You don't create any other accounts, and you need to copy this. So this is telling you the account and the account number. Now, we got 20 different types of accounts we use. But this week, you only got to work with the ones in bold. The first 6 transactions, cash is coming into the business. And so we debit cash and we credit whatever's coming in, whatever we gave up. And so I'm giving you a framework for making journal entry. You read the transaction, then you determine what type it is. If cash is coming into the business this week, it's got to be a 1, 2, 3, or 5. And we're going to debit cash and we're going to credit. Once you determine what it is, it's telling you what account to credit. If you're paying cash out, then cash is going to be credited. So you can purchase an asset, pay a liability, pay an expense, pay a dividend, and we may get the cash refunds a little bit later. But 7 through 10 are the key ones you're working with. So right now, 1, 2, 3, and 5, 7, 8, 9, and 10. If cash is coming in, it's 1 through 6 if cash is paid out. If it's a non-cash transaction, you purchase something with a liability, you use your credit card, then it's a 12. Then if you have a sale on account and you don't get cash, then it's a 15. So those are the only transactions we got to work with. And so I'm telling you what the debit and what the credit. And I'm telling you, you got to use these accounts. So we're going to take a break now.
This conference will now be recorded.
appears that it wants to act up when I'm sharing the screen for some reason. So Okay, so I put the item in Blackboard now. So I do not know why it wants to continue to act up. But I'm going to try it one more time to share the screen. And if it doesn't, then you should have this, in Blackboard, this illustrated problem, correct? Does everyone have that?
Yes, sir.
Okay. So let me try it one more time and see if it will try to act okay. Okay. Now I'll just try to have as much in there as possible. Okay, so here we have 10 journal entries. And one of the things you're doing is, okay, which one of these journal entries is similar to the one I've been assigned? The first journal entry says invested 10,000 into the business. So that's the, that's the item. So we need to interpret that. And we know if we invest the 10,000 in the business, we need a journal entry type. So cash is coming into the business, so it's got to be 1 through 6. Which one of those is it probably? Invested $10,000 in the business. If you had to guess between 1 and 6, which one would it be?
Is it number 5, borrowed money?
We didn't
Or
borrow.
I was
Would it
gonna
be
say number
2?
Not
3?
2,
number
Three.
4.
receive advance?
not 4,
Receive advance? Oh,
1.
1. Okay, so that's number 1. Notice what the chart does. Once we determine the type, it tells us what account to debit and what account to credit. So we go to our chart of accounts. Cash is 100. And common stock is 400. Cash is 100. Common stock is 400. So when we get ready to make this journal entry, what we got to value, what the company got was cash. And it got cash of $10,000. So that's what the business received.
So
Yeah.
how do you, I have a question. How do you know what type of and like what type it is or where it will fall on the list?
Well, we're showing that. We got these 10 examples and we explain it, and I'm kind of in order, okay, to help you out. So for the ones in bold, I'm sort of illustrating. So I'm probably coming pretty much in order where it's falling. And so you have to read the transaction and figure out which one it is.
anytime it's an investment, will it be common stock?
Yes, it's going to be common stock.
Okay.
So they don't change. We invested 10,000 in the business. So we got what we received the value was the common stock. What the business gave up, wait a minute. It got cash, excuse me. And it gave up common stock. So that's what's credited. And our journal entry type is 1. Okay. So let's look at what we did. We read the transaction. We invested 10,000 in the business. We determined that it was a type 1. We issued common stock. When it's a type 1, we debit cash and we credit common stock. And everything, as long as it's 1 through 5, we always debiting cash. And we look over here to see what we credited. Then, of course, we're going to go and get the exact account numbers off of this chart of accounts. So let's look at the second one. Cash received for car loan revenue, $50,000. So here's our business doing what we wanted to do, making money. So our type is going to be 2. Okay. We got cash. So we're going to debit cash and credit revenue, sales. Let's just say sales. So we look at our chart of accounts. Cash is 100 and sales is 500. Cash is 100, sales is 500. So in our next transaction, it's still cash, but now it's common stock. So we got cash again. But this time, what we ended up with was we had to sell our merchandise. We had to rent our cars. And we like that. We don't mind the people getting the cars and giving us cash. So we got cash. They used our cars. We got the revenue of $50,000. And we said that was a type 2. And all I've done here, I'm kind of numbering the journal entry. So this is journal entry 1. And that's going to help us later.
I have a question.
Yes.
For entry 1, why is the cash 100 but the debt is 10,000?
Say that again.
For entry 1, why is the cash 100 and the debt is 10,000?
The 100 is just the account code, the account number off of the chart of accounts paper that he told us to print out.
Yeah, this is the account number.
Okay.
Just like when you go to the bank and you put, if you
Okay,
put,
I'm thinking you're putting the amount of money it is on the account. I'm sorry.
that's okay. That's okay. That's fine. But do you think about if you go to the bank today and you deposit money, you want your account number where that money goes, right? So here's the account number, here's the money. And you want to make sure it's in your account. So when you run a business, it's kind of operating the same way. Whatever is happening, we want it in the right account. 3 says collection of cash from corporate customers. So this means we did some work, and we'll talk about it later. And we now getting the cash. So we go up here and we now have collection of accounts receivable. We already did the work. And we getting the cash. That's a type 3. So we're on transaction 3. And our type is a 3. So when we look at type 3, it says what? We debiting cash and we crediting accounts receivable. So notice that we just, because we're getting cash in, we always debiting cash. we look at our chart of accounts, account receivable is 110. So in transaction 3, we got 100 for the debit. Debit's always on top. Credit's on the bottom. Cash. And of course, we're going to be reviewing this all week. So this is your first day. And it's a little different. We got $20,000 in this transaction. And our final transaction here, we got a short-term working capital loan. So in journal entry 4, it was a short-term working capital loan. Well, that type is 5, we borrowed money. That's 5, we borrowed money. And when we borrow money, we once again debit cash and we credit note payable. And this will be a short-term note payable. You can have long-term and short-term, but this will be a short-term note. So we're on the transaction 4. We said the type was what? 5, correct? So we're going to debit cash. That account number is 100. And how much money did we get on the short-term loan?
25,000.
And we're going to credit what?
Notes payable.
Okay, so we got 350 notes payable. See, here's the account number 350. See, I'm picking this up easy, right? So what I will say now, those are the first 4 transactions. That's all we're using. And that's all you'll be using this week. We're only using these bold ones on receipts. Now we're going to go to payments, and I think we're going to do 7 through 10 in payments. So 5 says we purchase supplies paying $1,000 in cash. So we own the transaction number 5 now.
I have a question.
Yes.
So the one that we just did,
Mhm.
you put 4 there and then you put 5 there. Is that a typo?
Okay. 4 is these transactions. It's these numbers. Okay. I'm just numbering the journal entries we're working on. But the type is a 5.
Okay,
Okay.
what's the type?
The type is what tells us what to debit and what to credit.
Oh, okay, gotcha.
Let's find them. This is the first time we're hitting this. And if I just told you to do 40 journal entries and didn't frame it like this, you'd be all over the place. So this frames you. It tells you I got to get a type, and it's going to tell me the account numbers. So I read the transactions, I get a type. The type tells me what accounts I need to put down. So in the next transaction, I guess that's number 5, we purchase some supplies. So we purchased an asset. Here now, cash is going out the business, and whenever cash goes out the business, we credit it. But we got to debit the asset that was purchased. So we don't debit asset purchase. We go and we find out what was purchased, and it said it was supplies, 130. Okay. So what we purchased were supplies, 130. But now the cash is on the bottom because we paying it out. So we debiting supplies. And we crediting cash. And the amount was how much?
1,000.
1,000. And we said our type was what?
Number 7.
7.
So 7.
Assets.
Y'all getting it now. Then and like I said, this is why I spend this time on this. It appeared a lot of time a professor would think, well, this is easy, people can do this. Well, I found out that people couldn't do it. And so when I got the midterm and I told them to make journal entries, they couldn't, but I'd only spent a day or so on it. So I spent a whole lot more time, and I make sure you're working them and everything. Now, in general, you only got 2 minutes per journal entry. So we take it our time, but as we go through the course, you should be able to make a journal entry in 2 minutes. In 6, we did what? We paid on accounts payable. So what's our type going to be?
Would it be 8? The liability, payment of a liability?
Payment of a liability. So our type is 8. So notice now we're up to transaction 6. So I'm just, got them in numerical order. And our type, I'll move it down 1. We set our type in terms of paid on liabilities, a type what? 8, right? Now it tells us, we know we're crediting cash, but what are we debiting? We paid on the liability, so accounts payable is 301. So we're gonna debit 301, which is accounts payable. And once again, we're crediting cash. So you can see in these transactions, typically, you're either debiting cash or crediting cash. If cash is coming in, you debit it. If cash is going out, you credit it. So that's $5,000. So we utilize cash to buy some assets, supplies. We paid a liability. Then this next transaction, we're paying rent. Anybody paying rent today?
Yep.
Unfortunately.
Yes.
Is your cash going up or down?
Yeah.
When you pay the rent. So if this was your business, are you gonna debit cash or credit cash?
We're gonna credit cash.
No credit cash, because your asset is going down. So when we look at our type, it's type 9, payment expense. We got the credit cash, but we got to go on this chart of accounting and figure out, see, okay, what expense we paid. And what expense did we pay? Rent. Rent is what?
651.
651. Right. Let me put the 651 here. So we're transaction number 7. And we said that this was a type 9, right? So when you pay your rent, you did get something of value. You can live there another month. So that's what you got of value. But what did you have to give up to stay there? Your cash. Okay. What's our next transaction? So we're up to number what? 8 now, right?
For the next one, I use 10 and I put dividends 455. And then
So
cash.
pay dividends of 2,000. So you said the type is what? She's already saying it's a. She says it's a T.
The payment of a dividend,
Mm-hmm. What you gonna debit?
I debited 2,000.
Credit, but what account? Dividends.
Account number 455.
I'm getting it down, 455. So this is a type 10. We paying dividends, so we got to debit dividends, 455. That's what we got in value of dividend. We crediting cash.
Cash, yeah.
So when you put in dividend, we're gonna credit cash. And the amount was what, 2,000, correct?
Yes, sir.
So if you look at a typical textbook, it's not gonna present it this way. It's just gonna tell you to make these journal entries. It's not gonna frame it. So because students had a whole lot of problems of making journal entries, I said, let me try to come up with a way that they could frame it, they'd have something to refer back to, these journal entry types. So in our 9th transaction, what happens? We're purchasing supplies on account. So what's our type going to be? Because no cash is involved. It can't be 1 through 11.
Yeah, I was about to say, would it be the purchase of an asset utilizing debt?
Correct. That's 7 through 10, you're using your debit card. In 12, you're using your credit card. Because your debit card takes cash right away. Your credit card, you got a delay. And so we're going to debit the asset purchase and credit the liability created. So we buying supplies again. Okay, so we buying supplies again. So we're gonna debit 130. But this time we're doing what? We're doing it on account. So we're using this account 301. So we debiting supplies. That's what we got a value. But we created, just like when you charge your account, your credit card, we created an obligation that we've got to pay in the future. And here, the obligation amount is $8,000. Now notice that we paid on this item in I got transactions, just put them in order of the journal types, but we don't pay something unless we first bought it on account. So we bought it on account. So we have to have a type 12, then we can have a type 6. But if we didn't buy nothing, then you don't have to pay anything. And what is our final transaction for the day? What's happening? We earn, for our corporate customers, the execs don't come in and pay us. They just come and get a car from our company and we bill the company. So we got an arrangement with ExxonMobil that the execs can come in and get a car, then we just send the bill and they pay us at the end of the month. So the execs utilize our cars and got $30,000. What type we talking about now?
Would it be the sale of on the account where they say
Right.
account?
The only one left in bold, they got them bold, the ones we utilizing. So it's gonna be what?
Out ain't none of this bold when I can get out. My bad.
It's gonna be 15. So we do number 10. The type is gonna be a 15. That's where you do the work, you're gonna get the cash later. So we don't mind transactions like that. So we're gonna debit, notice it says we debit account receivable. And account receivable is what? 110. We know that on our chart of accounts. So we're gonna debit account receivable. And we're going to credit what account? So it's sales, right?
500.
Count 500. We're crediting sales. And our amount was how much?
30,000.
30,000. So these are all of the types of journal entries we're working with this week. 1, 2, 3, 5, 7, 8, 9, 10, 12, and 15. And once again, you cannot have a type 3 unless you previously did the work. So you got to have done the work, we did it here, then you collecting the cash later. So make sure that, okay, when we do the work, accrual basis accounting, we're going to recognize the revenue right away. Okay. So we have to have this 15, then we can have a 3 and collect later. So we like 15s because we're gonna get our money later. Okay.
The journal entry that you want us to present tomorrow, you wanted that done in the Excel, or
Yep, you
can
put
it be
them on
done?
the Excel sheet because you've got to eventually send me all 40.
Okay.
The first 40 you got to send to me. Now, I don't want you to, you're just going to be presenting them to me like this now, but eventually I'm going to ask for that Excel sheet with all 40 journal entries.
Okay.
Any other questions?
Are we gonna like share our screen or to
Beg your
present
pardon?
it? Are we gonna share our screen to present it, or is it just
Yeah, share your screen, especially when you present tomorrow. I'm not going to say anything. I'm just going to take off 2 points.
okay? Because I was saying, my computer's not working right now, so I have to go to the public library. I don't know how
But you
to
just be working tomorrow. So I'm not, this first day of class, so I wouldn't take off 2 points today. I'm not that type of person.
you know what I mean? Like
But I could take them off tomorrow.
Okay.
So you are losing 2 points today, but you will lose them tomorrow.
So is there a way for us to get extra points to make up for those?
Yeah. Okay. If you notice, we go from journal entries 1 to about 17 based on the number of people in the class. And then on Wednesday, we're going to pick up at 20, but we're going to do 20 journal entries tomorrow. So if you want extra points, you just do, if somebody's not here, so if somebody's not here, then you can do that journal entry and get another point. So if you mess up, then you got to pick up another one. But if you don't mess up, if you get it right, then you get extra point. So there's ways to get bonus points if you got it right. But we're going to let those people who mess up now, we're going to give them a chance. But nobody's mess up. Maybe one person. Maybe Crystal will mess up, but everybody else going to. If you mess up, you'll have a chance. And that'll be the same way in day 2. Now, as we finish tomorrow, we might do a little practice quiz, won't count, to see how y'all coming along, because I got to see if y'all can make journal entries. I can only do that if y'all practice a little bit. So at the end of the period tomorrow, we practice, and it won't count against you anything. But on Wednesday, there'll be an attendance quiz. That's those bonus points. So you'll have to have some bonus ones to do, so I can see where you are. I can't tell where you are. You got to be able to work all of them. So you're just doing one tomorrow for 5 points. Doing another one on Wednesday for 5 points. But then you got to be able to pull them together and do all of those journal entries at some point. And your journal entry quiz is on Friday. But if we've done journal entries on on Wednesday and on Thursday, you should be ready to do journal entries by Friday. 2 minutes though. So you got to get used to doing your journal entry in 2 minutes. So you can't just be lollygagging around. What am I, and so that when we have to go through all the steps and you got to do some other things with the journal entries, you still playing with the journal entries. You got 2 minutes on quizzes to get your journal entries done. Whether it's 5, then you got a 10-minute quiz. If you got 10, I'll give you more time than that. But in general, you need to be timing yourself to do journal entries in 2 minutes. Okay, that's what you're working on, because you're going to have to do more than journal entries eventually. But right now, just journal entries. So is everybody going to be able to make their journal entries tomorrow? Anybody not going to be able to make a journal entry tomorrow?
It's a 50-50 so far.
50-50. You know, so you're saying I'm a 50-50 teacher, huh? Is that what you're saying?
No.
I've done all this talking and work today, straining my voice. I had to get some tea.
All right, it'll be done.
That's what I want. See, I don't want any Rockets basketball here. I don't want any Rockets basketball. I want some winning basketball. So Milwaukee Bucks, Philadelphia 76ers, New Jersey Net winning basketball. Well,
That's messed up.
why is that messed up?
'Cause I'm a Rockets fan.
Well, but see, that's fine. You can say wait the next year. We're gonna get a #1 draft choice. So there was a reason that they traded the guy who, so they got 3 first-round picks next year. They can turn it around if those picks are good. So sometimes you got to make that sacrifice, like buy your book so you can learn this material. Then that way you be able to make a lot more money in the future and do well on course in the future. But you got to make that investment. So they're making that. If they make some good draft choices, they have new people, so they'll be exciting to watch next year anyway. Okay. So all of us Rockets fans since we're in Houston. But I just stated the fact, you got the coach there. And the coach wants y'all to win, so I want y'all to win. Got it. I only win if y'all win. So that's why I gone through all of this and got these problems. That's why I wrote this primer. So y'all will be able to do this. If I was just saying making journal entry, didn't say make them, fine. But I got it all set up for you. I got your types. I got your accounts. So you got a structured way to make journal entries. So if you apply yourself appropriately, you should be able to do that. So that's what I expect tomorrow. Okay, so don't let me down. We aren't in the playoffs yet, but don't be letting me down tomorrow. Okay? Y'all have a good one. Study, read, work on your journal entry. You got your types and everything. And I expect to see exceptional results. Now, tomorrow, it's sort of your little work by yourself. But by Wednesday, I might be giving one grade for the whole class. So everybody putting their journal entries up. Then, since we got these team people who like to be as a team, will be a class effort there with me taking off a point every time somebody misses a journal entry. So that's what we'll do on Thursday. Okay? You all have a good one. Stay safe, study some accounting, and we'll see you all tomorrow.
Okay, have a nice day.
All right, Prof.